All right, let's just jump right into this because today we're breaking down a claim that sounds, well, it sounds almost made up. We're talking about how one investor managed to 100x their portfolio. And nope, that is not a typo. We're going to dig into the strategy, the mindset, and the wild journey behind this incredible story.
100 times an initial investment. It's the kind of return that sounds like a financial fairy tale, right? The sort of thing that most of us only ever dream about. But for this one person, it was absolutely real.
And here's the real kicker. This didn't happen over a lifetime of patient investing. Nope. The transformation from 1 crore to 100 crores happened in just 3 years. It's the speed, the sheer velocity of this growth that makes this whole thing so mind-blowing. So you're probably asking the exact same question I was. How is that even possible? Well, I can tell you it wasn't just dumb luck. It was a potent combination of a super high-risk strategy, some serious conviction, and a truly contrarian mindset. Let's get into the details. So where does a journey like this even begin? Well, it didn't start in some calm, quiet market. It started right in the middle of total chaos. Let's walk through the timeline of how this all actually went down. Okay, so it all kicked off with a really bold bet on a distressed asset. But then, in that first year, bam, the market panicked and the stock just plunged. Now, most people would have bailed, right? But this investor, they held firm. And then came the absolute game-changing moment, the pivot. After selling for a profit, they didn't just cash out and take a vacation. No way. They rolled every single rupee of it into a new opportunity in renewable energy. And that conviction, that one move, is what led to the insane, explosive growth in year 3. That story is just wow. But what was the actual playbook here? How did they do it? So now we're going to stop talking about the what and really deconstruct the how, the specific strategy that was the engine for this entire journey. The whole thing really hinges on one powerful and, let's be honest, pretty terrifying concept: super concentration. I want you to forget all the standard advice you've ever heard about diversifying your portfolio. This is the exact opposite. We're talking about putting a massive chunk of your capital into a single high-conviction idea. It is, quite literally, the definition of high-risk, high-reward. So what does this look like in practice? Well, it's kind of like a 4-step process. First, you got to find an opportunity that everyone else is running away from. Then, instead of hedging your bets, you go all in. You concentrate your capital. The third step, this is the hardest one by far. You have to hold on, with patience, through some crazy volatility. And finally, you don't just take your profits and run. You leverage them into the next big thing, creating this incredible compounding effect. Another key piece of this puzzle was how the strategy was carried out. It was a completely hands-on, do-it-yourself approach. Handling your own trades gives you total control, especially with these smaller companies where brokers can sometimes face limitations. Plus, it forces you to understand your investment on a much, much deeper level. And of course, you cut out all those unnecessary fees. You are completely in the driver's seat. But a strategy like this isn't just about tactics and charts. It really requires a fundamental shift in how you even think about wealth. It's about moving away from traditional, comfortable assets and toward unconventional, high-growth ones. So this mindset, it really required a stark choice between 2 different worlds. On one side, you've got real estate. It feels safe, it's familiar, but the growth can be a lot slower. On the other side, you've got equity. It's volatile, it's scary, and it demands courage, but it holds the potential for truly life-changing returns. This investor chose to embrace the chaos. And that choice led to the investor's core belief, which is pretty radical. The idea is that the real path to significant wealth required not just adding stocks, but actively eliminating real estate from the portfolio. The whole goal was to free up every bit of available capital to go all in on equity's high growth potential. For a lot of people, that's a tough pill to swallow. This all leads us to the bigger philosophy at play here. This isn't just about being aggressive with your money. It's about being a true contrarian, someone who actively and intentionally goes against the herd. This quote from the source it nails it. Making money is not an easy task. It requires going against conventional wisdom. I mean, if you follow the easy, conventional path, you're probably going to get average conventional results. To achieve something extraordinary, you have to be willing to challenge what basically everyone else thinks is true. So what does that contrarian mindset actually look like? The principles are super simple to say, but they're incredibly hard to follow. It means buying when everyone else is panicking and selling when they're all greedy and euphoric. It means you're proactively hunting for opportunities and focusing on building a dominant long-term portfolio instead of getting distracted by all the noise of day-to-day trading. Okay, now I have to be crystal clear about something here. This entire explainer is a case study. It is not financial advice. What we're looking at is a strategy that involves an absolutely massive amount of risk, all for the potential of an equally massive reward. This is an outlier, for sure, not some universal blueprint for success. And that brings us to the final, and I think the most important question. We've talked a lot about this investor's appetite for risk, but after seeing all this, what does it make you think? What's your own personal definition of risk? Is it the roller coaster of the stock market? Or is the bigger risk actually playing it too safe and never reaching your financial goals? That's the real question this whole story leaves us with.